This video is really a heart-to-heart talk, and I really don't consider it my typical video on this channel, but I think it is important that I share this because it's really pressing on my heart. One of the situations that I've found myself in as an immigrant is, you move into a country and you're settling into the country, and your goal and aspirations really is to achieve that financial freedom, build wealth, and all that stuff, which is great. However, our emotions lead us astray in so many ways, and I'm going to share that with you here. So if you're new, welcome. If you're a returning subscriber, thanks for clicking on this video, and I hope that you gain something from this. My goal is that for every video I put out, even if it's just one thing you're able to gain, then I've done my job. And I hope that you're able to gain that from this video. So please don't forget to drop a like on the video, and don't forget to subscribe to the channel as well. So let's talk about this real quickly. Our emotions really gets us from either doing the wrong thing at the wrong time or gets us to do the wrong thing at the right time. And I'm going to give you an example. You see, when you are investing or when you are saving and you want to buy something or you want to achieve a certain goal, we are often too focused on the ultimate goal, which is a great thing. We want to have a goal, we want to have a plan. I'm sure you guys heard about the SMART concept, setting a specific goal that is measurable, achievable, and that can be tracked as well. And the goal here is that as we walk towards that goal, all right, we want to guard against things that will draw us back. We want to guard against things that will prevent us from reaching that goal. But what are we doing to guard against the emotional factors? Because yes, you may be making a lot of money, but that doesn't mean that you're actually going to be rich or reach your goal. Because if you haven't done your part in making sure that that emotional aspect is under control, you will do the wrong things. The stock market has been performing somewhat unpredictable in the recent weeks. I mean, prior to the week of this second to third week of July, okay, the stock market has been really doing well. But then something changed. We have all the politics going on. We have all the interest rate factors coming in. And then the big part now is the financial reports that these companies are making. And you would start to see a lot of fluctuations. Today the market is down, tomorrow the market is up. As of the recording of this video, the market yesterday was down by almost 2% or so. All right, at least on the S&P side anyway. And the goal here is, if we focus on those factors on a day-to-day basis, we forget the long-term approach. And if we let our emotions get us at the moment, we are going to react in the wrong way. Understand that the stock market presents opportunities along the way. And if you look at the graph of the stock market, all right, over the years from the 1940s, 50s, 60s, and so on, you would always see some huge declines, which are known as corrections, okay? Sometimes you see the crashes, which are huge, more than 10 to 20% decline. Those are also expected because every economy will have to go through that period of crashes occasionally. But let's focus more on the correction. If the market is correcting itself, what do you think the market is telling you? Because at the end of the day, the stock market is an emotional gauge of what is going on, what investors feel, right? For example, if I think this item is worth X amount of money, well, I'm willing to back it up by putting my money into it, and then the price goes up. On the other hand, if somebody feels, well, this thing is no longer worth that thing, right, the market sells off. If you have many buyers, the market goes up. If you have many sellers, the market goes down. Now, what part of that side, or what side do you fall as you invest? Because if you are carried away by those minute details of the day-to-day activities, whether it's in politics, whether it's in the monetary policies that you make, whether it's even in your own day-to-day, commitment to your goal. In this case, let's assume you're supposed to buy today, but you're worried, oh, this market is still high today, don't let me buy. What will eventually happen is that you will miss a lot of opportunities along the way, and those opportunities are generally the greatest opportunities for you to buy. There was a book I read there, this was maybe a while ago now, so I can't remember the details of the book specifically, But I remember when they compared, people that held index funds that just bought on a regular basis without having to think about it, and they compared their performance against those that were trying to time the market, like day trading and all that. Over the course of years, the majority of the people that held on to index funds performed better in comparison to those that were day trading. So what does that tell you? One, there's nothing wrong with day trading, but you have to know what you're doing, or you're trying to time the market. So you sit on the sidelines waiting for the market to crash, and then you want to jump in. But guess what? You never know where the bottom is, and you never know where the top is. You may think it's too high today, but then tomorrow it goes higher. Or you may think it's too low today, and maybe it's the time to buy, but then tomorrow it goes lower. So the point here is we shouldn't focus on those day-to-day factors of how the market is performing. Rather, let's put our emotions aside. Put all these investments that you have or you want to hold, put them in automatic investments. Let them automatically be invested on a regular basis. Now, it's okay to have a certain amount that I will call it your play money, okay, that you can use to maybe occasionally get into the market. You buy, Apple stocks because it's down today, and then it goes up in 2 months, and you're like, you know what, I want to sell it and cash out. Now remember, you're going to pay taxes, okay, depending on the account it's held in. But let's assume it's held in a brokerage account. You're going to pay taxes, and I'm more on the belief that I prefer to hold long term. But don't get me wrong, there are times I will get in, buy, and maybe if I don't believe in the company anymore, I would sell it, even if I am at a loss or if I'm at a gain. It doesn't matter. But the point here is this. The point of this video is this. As you are invested, we need to get your emotions out of this. It's hard, I'll be honest with you, especially when, even with the play money that you will put into this market, you get emotional because you don't want to lose money. But the part of this is that as an investor, you have to be able to take on that risk, because there's a certain level of risk that provides you a certain reward. If you don't want to take any risk, then you should be putting your money in a savings account. And I'm sure that you know that if you put your money in a savings account, the chance of making anything is, zero, because, well, inflation is high, right? The interest rates they are paying, the majority of those savings accounts is almost nothing. And your ability to make that money turn into to double and increase in value is very low. It's going to take forever. So we don't want to do that as well. So in playing it safe, it's okay to put your emergency funds in a high interest savings account or a savings account, depending on what you want to use that money for. Or on the other hand, we take some risk, but in this case, we let our emotions not rule the game for us. We want to put our emotions out of it and consistently invest on a regular basis. Like I said, this is more like a heart-to-heart talk, and I really just wanted to let you know that at the end of it all, right, look at the stock market, look at the big picture. The big picture is that this thing is here and it's been going there. The truth is it may come down, but then it's going to pick up again. Companies are getting bigger. Earnings are increasing on a regular basis. The population of the world is increasing. People are spending more. More billionaires are made through this stock market. So the goal here is that don't let your emotions rule you and let the market do its thing. Just wanted to share that with you. If you found value in it, please don't forget to drop a like in the video, and I'd love to see you in the next one.